Natural divergence shows you where momentum is heading towards in the market. The zero line separating the blue and the red shaded areas, but also the extra confluence with picking up smaller momentum changes with this green and red line on top or on bottom. Therefore, it can be an extra powerful indicator with these multiple confirmations. Here's the first example. I've got the 4-hour chart of S&P 500 E-mini futures. Now adding fibs to find premium and discount of a range with extra levels to find zones to trade from. And specifically, I like to use a 1.27 between the 1.68. We have a high here, the most recent high to the low created. So that's our range. And we can see the bearish divergent is being found here. Once this candle closes is when the natural divergent was picking up on at the divergent right of this candle closes. Then we see it poke up into the zone, the potential reversal zone, and this again is your range. And if we are expecting it to reach outside of a range, it normally is not going to expand farther than here if we see price action closing strong or maybe long wicks above the 1.68. Typically that might signal continuations to the upside. So if we are expecting bearishness, we can reasonably expect this zone to hold. It's not typically going to expand past the 1.27 and 1.618 levels. So that's already a confirmation from our recent range this side to this low. Then we find bearish divergence showing here. What happens just a couple candles later right after this one? We now have the line turning red, indicating bearish momentum to the downside. That's exactly what we see here. Very strong impulsive move to the downside, that's where to take profit.